lackluster. Like you said, it's pretty lukewarm a day, at least at an index level. There are quite a few bright spots there, one must say. So, Bajaj Finance, of course, has been right on top with a 4.5% move. There's Dalmia Bharat, Ramco Cement. They're all seeing some fair amount of traction. And then, of course, there's MCX sitting with a gain of about 6.5%. But the sweetest of them all clearly is Balrampur Chini with an over 7% gain. MCX will just come up for you on your screens, almost a 7% move coming in there. And then Balrampur Chini, which is now sitting at a gain of over 7% as we speak right now, at least in the futures. There's, of course, Strides Pharma as well. They've announced the US FDA final approval for one of the drugs, which has a market size of $1.3 billion. So that is something that's keeping the street excited in this world. Delta Corp, the pot of troubles ceases to go, and there's been a taxation notice now which they've got, and that's to the tune of about over 11,000 crore rupees. The stock in any case has been beleaguered, and now it puts further pressure on this stock price. Also to add to that, earlier today there was a 3% block deal as well, wherein 3% equity changed hands on Delta Corp, significantly under pressure as we speak right now, over 19%. Having said that, the company has said that they're going to be pursuing legal remedies to challenge this particular order with regards to the taxation notice that they've got. There's IRCTC. Investec has now initiated a buy, target price of 900. They're saying that there is a multifold increase in the government capex focused on capacity, and they see very strong growth prospects for this one. This one, of course, going strong today. 3.5 million shares traded on this particular stock price. So that's pretty much it on the trading flavor as we speak right now. But let's welcome on board our chartists as well and find out which way they think the markets are going to move. Naresh Mirani, Sudeep Shah. We also have Mahantesh, Sabarad joining in on the fundamentals. But Naresh, hi, afternoon. If I could first start off with you, which way do we go from here on the index?
So first indications of a reversal in some of the heavyweights. So we are seeing ICICI Bank, which was correcting for the last 3-4 sessions, making a recovery. HDFC Bank has not seen follow-up selling around 1530 mark, but not a sharp recovery over there. Reliance Industries is also trying to make a pause around 2330-40. Once we start sustaining about 19,800, that would be an indication of a short-term bottom in place. Overall, 19,500-600 remains a short-term support. The mid-cap and the small-cap indices have seen a good recovery from the lows. So that indicates the bias still remains positive, more so stock specifically. But once we start seeing a sharper recovery in Reliance and HDFC Bank, that would confirm a reversal in Nifty as well.
Let's see when that confirmation really pans out. For now, the space which is doing okay are some of the select banking names. So you have some of the names from PNB, etc., which are doing okay. Bajaj Finance and Finserv are two stocks which are holding okay. And then, of course, MCX is the other one. Sudeep, since you're with us, talk to me about what's your view on MCX and some of the other cement names which are perking up, whether a Ramco Cement or a Dalmia Bharat.
Good afternoon, Anisha. We have seen a big breakout in MCX today. Now, post this breakout, the stock is at its highest level since December 2021 now. So this is a big multi-month breakout, and I feel the way the chart patterns are shaping up on the daily as well as the weekly charts, the momentum has just begun now, if I may use this word. And from here on, I feel that the next move could be 2100, 2150 on MCX. And one could keep a stop loss of around 1840 on the downside for this stock for playing out this entire up move. Now, talking about cement stocks, now we've seen since today morning, we have seen a good pullback in Ramco Cement, then Dalmia Bharat, and even Grasim is showing some kind of a decent pullback in the last 1 hour. So, and incidentally, Dalmia Bharat is one of our picks for the day also. And what we've seen in Dalmia Bharat is that the stock has been in a decent uptrend since June 2022. And even if we see the last bottoms around swing bottoms around 1900, it was a double bottom in July and August 2023. And post that, the stock had moved to 2400. And now in the last couple of days with the correction in the markets, the stock has corrected around 23% of its last up move, and which is very close to the swing highs in June, which is around 20-80. So this is a very good pullback, a very good zone from where the stock has reversed, and we feel that the overall uptrend is intact. And from here on also, the stock could head higher up to 2450, 2470 on the downside. and one can keep a stop loss of 2290 on the downside for Dalmia Bharat.
Let's pull up some of the real estate counters because they are sitting at the highest point of the trading session, whether it's a Godrej Properties or a DLF or India Bulls Real Estate, Sobha, Brigade, pick up any of these names. And there's one incremental news flow which could be positive. These are the 1 month chart. I would suggest to pull up just the intraday chart because that will tell you that they're sitting at the day's highest point. And the reason is the news flashing for you on the screen that the government is considering $7.2 billion worth of housing loan interest subsidy scheme. Now they are looking at spending a total of 600 billion rupees when it comes to the subsidized loans for small urban housing over the next 5 years. This is what Reuters is actually picking up from government sources. The banks are likely to roll out the scheme in a couple of months itself, and this coming ahead of the key elections which are lined up in some of the states as well. Overall, so this comes as a positive news. The scheme will offer an annual interest subsidy of between 3 to 6.5% on up to 0.9 million rupees of loan amount. And of course, there are other details as well in terms of what the outer limit of all of these could be. But the real estate stocks are fairly excited. A DLF, a Godrej, a Sobha, pull up any of these names because one of the things that has been perhaps putting a bit of a stop to the tremendous run that we have seen in the real estate demand was the lack of affordability with the interest rates increasing. Now even that gets subverted on account of this subsidy scheme which is going to come out probably. Mahantesh, your view on the real estate sector and the news which is just trickling in, how big a fillip could this be, the interest subsidy scheme on home loan?
That's a great kicker that could come for the real estate company if that scheme becomes a reality pretty soon. I guess that typically the real estate market always relies on a lot of incentive-based kind of selling. And if you're going to have a government incentives or a subsidy coming in on the interest side, it should really give a great deal of fillip to the real estate sector. That's a positive news.
Indeed. In fact, let's just take stock of some of the realty names. Maybe too early for them to see a reaction. Actually, quite not. You've got the Nifty Realty already spiking up. It's sitting at the day's highs, and I think it'll pick up further traction as we speak right now. 1% move is what you're seeing. And across the board, you are seeing good amount of movement coming in on the realty stocks. That's, of course, Godrej Properties, Sobha as well, 4% higher. DLF will also then just come up for you on your screens next. But that said, the story of the day, of course, continues to be, Bajaj Finance. That stock is holding up 4.5%. Mahantesh, are you intrigued about the timing of the fundraising, or do you think, given the valuation that the stock is trading at, given the market conditions, this is the right time from Bajaj Finance? Because I recall even in 2020 at the COVID peak, they were the first ones to actually raise money.
Yeah, I think Bajaj Finance has been steadily upping the game in terms of their overall balance sheet size. And one of the key ingredients for that balance sheet size growth is adequate capitalization and growth capital. This is the right move, I guess, for Bajaj Finance. Valuation has never been a challenge for Bajaj Finance. Multiple times we have seen that a lot of people seem to argue that Bajaj Finance is valued too high. It's beyond premium valuations even for some of the banks. But I think the business model that they have cultivated in terms of the small ticket size loan and the overwhelming presence that they have, which in a way has not been replicated. To my mind, I see no other close competitor to them in terms of replication. Means that Bajaj Finance can command the premium and can continue to raise capital as and when they desire. So timing-wise, I'm not surprised. Valuation-wise, neither am I surprised.
Okay, not surprised by the timing or the valuation, but that's the news coming in. Bajaj Finance, the fundraise is quite imminent. But Nuresh, coming back to you and talking about some of these real estate plays because they are reacting as we speak. Would you be a buyer in any of the names?
So the whole sector looks pretty interesting because the trend has been pretty strong for the larger names like DLF, which has recently made a new 52-week high, went up higher, retesting the breakout. So DLF remains the best bet at 500, 520 levels for a medium-term outlook. Then maybe smaller names could be interesting, which is where a Kolte Patil, which crossed a 3-4 year high and has crossed above those 2018 highs at 400, 450 levels. So that would be the next one. But as of now, would stick with DLF and Kolte Patil going forward.
Left Kolte Patil, that is what Naresh is recommending right now in trade within the Realty Pack. Strides, of course, we've been highlighting as to how that is one stock which is in focus. There's a note coming in from DAM Capital as well. In fact, if we can go across to Summit, find out what are the takeaways from that note, that'll be great.
Well, Strides Pharma remains in focus on the back of a couple of announcements. Firstly, the company has gotten US FDA approval for a relatively high value generic product, that is Vascepa. Now, the market size of this drug is expected to be around $1.3 billion, and Strides will be launching the product immediately in partnership with a global generic company. Now, though Strides is the 5th company to get an approval, it could be the 4th one to launch this product. Now, among Indian players, Dr. Reddy and Zydus have gotten approval, but Zydus is yet to launch this product. Now, typically sourcing the consistent API supply for this product has been a key hurdle for companies, and this could be one of the risks for Strides Pharma going forward. However, depending on the market shares that Strides is able to garner, and given the fact that there could be some price erosion, DAMCAP analyst believes that the revenue potential from this drug could be around $20 million, more than in fact $20 million. And do remember that this is amongst the largest generic approval that Strides has got in the last several quarters. Now, Strides has 260 ANDA filings with FDA, and around 230 plus has been already approved. Strides also aims to launch nearly 60 plus products over the next 3 years, and today the company will also be holding a conference call at evening 5 p.m. to give details of the corporate restructuring that it will be doing to create a leading global CDMO player. So keep an eye out for Strides Pharma in trade.
Yes, and Strides Pharma up almost 6.5%. I do understand there's a conference call later in the evening, so we'll keep getting you updates from that as well as to what the management says. But the other big news flow that we are tracking comes in for the manufacturing sector, and not great news for the likes of Dixon, Amber and the other manufacturing companies like Sirma, Keynes, etc. And that's because the IT hardware import curves, which are going to come from October itself, they seem to have been pushed by almost a year, and perhaps they'll happen next year now. Let's go across to my colleague Sumita to get the latest on this story. Hi, Sumita.
Indian government's import management system, or a portal for submission of licenses for importing electronics including PCs and laptops, will be up by November 1st. Sources have confirmed to ET now. What this also means is that import restrictions are likely to get loosened and eased, and there won't be any immediate restrictions on imports, which is a major relief to global electronics manufacturing brands. Now, with this import mechanism, India will look at regulating inbound shipments of such products. Now, DGFT, remember, announced this policy on putting curbs on imports of laptops and PCs in August that was aimed to ensure that only trusted hardwares and systems enter India, and to reduce dependence on imports and, of course, boost local manufacturing. So what will the new import management system be like? Now, import authorization will be given to companies on the basis of a few parameters like import value of previous year or an average of the past 3 years and import quantity. In fact, companies will not be asked to import less, and there could be a possibility that these licenses will be issued in just a few days flat, 2 days flat, and the website will have minimal manual intervention to allay fears of any complications. Several meetings with industry stakeholders have happened regarding this with the government, where their grievances have been heard regarding setting up of their manufacturing and immediate impact of on electronics items. Now, one such meeting with stakeholders and government is scheduled to take place today. Remember, nearly 73% of India's total laptop imports in the first 3 quarters of 2022 came from China, according to reports, which the government, as we understand, wants to lessen its dependence on. Remember, to supplement this, a policy move to boost manufacturing was also introduced via PLI 2.0 scheme for IT and hardware, for which 40 companies have applied, and of these 40 applications, 30 to 33 companies will get clearance.
Okay, that's the exclusive takeaway coming in and what the government is planning on the import of laptops and other devices. In the meantime, let's just take stock of what else is looking up in the market right now. Well, the index continues a little bit soft and we're down about 65 odd points or so. But Rampur Chini, MCX, some of the cement plays, Bajaj Finance, they all continue to hold up in trade as we speak. In fact, cement is one of your largest sectoral contributors today. Shree Cement, though, is marginally higher. The bigger moves are in Ramco, Dalmia Bharat, as well as ACC. They're the ones which are perking up very nicely in trade as we speak right now. But on the other hand, Naresh, just wanted to get you in on the charts of Balrampur Chini. Quite a spurt in the stock. Where does it head from 440 thereabouts?
So technically, if we look at Balrampur Chini, the stock breakout above 420, 415 levels, went up to 450. The stock goes into derivative band and retested it. Today, the stock was out of derivative band. We've again tried that move towards 440, 450 levels, which was the high last week. But the structure is pretty positive. Multiple attempts have been made around 420 mark for the last 12 to 18 months. So a clear breakout here. Ideally, a target price should be 500, 520 in the short term. So buy at current levels, add on any dips to 420, 25 and have a medium-term outlook towards 500, 520. And the whole sugar sector has done really well, especially the North-based sugar companies. So Balrampur still has a lot of catch-up to do with the rest of the names.
Okay, so that was about the cements, rather the sugar stocks. But the other one that I want to talk with you, Sudeep, is IRB Infrastructure. That stock has suddenly spiked as much as 9%. What's happening there? And the other one is, of course, Macrotech Developers as well. Would you be a buyer?
See, if we talk about IRB infrastructure in the last several months has been in an uptrend only, and specifically, if we see right from 2021 levels, once the stock has moved beyond this, the stock has never really come back and broken that level on a longer term time frame. And recently, in the last couple of months, we have seen a fresh swing move from 25, 26 levels. And the stock right now, as we speak, is again trading above major part of the resistance zone, which was around 30, 29 and 31 band created over the last several months. So I feel the charts are quite strong on the daily and the weekly setup. And one can be a buyer on dips in this stock with a stop loss at 30 and a target at 36, 37 on the upside. The next stock which you just mentioned is Macrotech Developers. Now, see, Macrotech Developers, if we see the stock is an overall uptrend, but still it is facing resistance at higher levels around 780, 785 zone. So once the stock crosses above 780, 785, then I feel there's a clear up move up to 830, 850 on the upside. So 785 will be the level that I would be watching out for on Macrotech, and only about that stock, I would be a buyer in that.
Thanks, Sudeep, for talking to us about those stocks. But time now to slip into a very short break. When we come back, we'll continue the discussion with our guests.
Unity now still a little bit soft, actually flat for the index, so we haven't moved much. It's been a very, very narrow band from the high to the low of the day that the index has been trading in. Similar has been the picture actually for the Nifty Bank as well, although of course there are movers like a Bajaj Finance which have been aiding the financials. But yeah, the Nifty Bank is pretty much a no-go. Apollo Hospitals, Tata Consumer, Asian Paints, Kotak Bank are some of your movers. On the flip side, the pressure is from an SBI Life, from a Hindalco, Infosys, Wipro, TCS, L&T, Reliance. They're the ones which haven't moved at all and weighing heavy on the indexes as we speak. But Sudeep, let's revisit the two stocks which really weighed heavy on the market all through last week. That's Reliance and HDFC Bank. And what do you now see on the charts?
Aisha, if we see HDFC Bank, if we see Reliance, let's take Reliance first. The stock from August, it has been in a downtrend right from 2050. There has been a fall followed by a small rise, and once again the fall has continued. So I feel till the time this zone where the 100 DMA is placed, which is around 2400, 2390, 2400, till that does not cross, the stock is now headed firmly on the downside. And the first important support from here would be 2290, where the 200 DMA is placed. And remember, this is the same zone of 2250, 2300 in May. Reliance had consolidated at this zone before making a big move up to 2600. So once again, the old support zone of 2250, 2300 would come into question and would act as an important support. So I feel that zone would be a bit critical to watch. And I feel till the time that happens, the stock still will continue sliding down, although the pace of the slide will now be a bit slower. But I have my doubts of a bigger rebound till the time the stock crosses 2400 once again. And coming to HDFC Bank also, it's a similar story. In fact, HDFC Bank since November 2022, it has been trading in this range between 1550 and 1700, 1720 on the upside. So essentially, it's trading in a very, very short, say 10-12% range. And once again, it is now approaching the lower end of the range. So now it is approaching a critical support, which is around 1500, 1520 zone. And this zone will have to very closely watch. If the stock slides below 1500, 1505 levels, then it could open up doors for 1430. But 1500 would be the most crucial number on the downside. And now for a reversal play, 1575, 1580 would be the first level that we need to watch out for. Sustaining above this level, the stock could once again come back in the range up to 1650. So two levels, 1500 and 1575, which would be very crucial for HDFC Bank from the next few sessions perspective.
Sure. In terms of the other movers, it's also Indiabulls Real Estate, which has suddenly spiked a 9% gain coming in there. You also have Ramco Cement, Sundaram Finance, and Hoodco is one stock which has been doing quite well. In fact, if I remember it right, on Friday only we were discussing that stock was locked up in upper circuit 20% higher. Today as well, it was at least, okay, so from the bottom of the day it has moved up, but still it's down almost 1%, but a bit of a spike. Not sure if they also have exposure to these low-end range of housing, which might be getting a fillip on account of that interest scheme, but nonetheless, these stocks are fairly excited. In fact, Mahantesh, from the entire housing finance basket, which are the stocks that you would like, or do you think which are likely to benefit from schemes like the interest subvention scheme that we just spoke about?
So normally the interest subvention scheme will be sown through PSU banks, not necessarily NBFCs. But yes, and we will have to watch what the scheme details are. But nevertheless, what really happens is that there will be competitive pressure actually on NBFCs when such home loans subsidy schemes start gathering pace. So I would rather be a little watchful of any of these housing finance companies right now, and watch out what the scheme really is all about before jumping into them. But nevertheless, I think a few names do come to one's mind when it comes to housing finance. These are the companies which have recently either raised capital or have done really well in terms of their housing finance portfolio. L&T Finance is one, Chola Finance is another one, which has been at the forefront. And housing finance is becoming increasingly a larger portion of their overall lending basket. So the first reaction to that subsidy scheme is that let's wait and watch what the scheme details are before we jump into the NBFC bandwagon. But the banking sector definitely will benefit. Typically, the PSU banks having the largest reach when it comes to home loans would typically gain.
Pretty quiet a session, and then of course that little bit of a spike up coming in both realty as well as the HFC names. While it continues to be Bajaj Finance, IT continues to weigh in heavy on the market. So you haven't seen much of a move off from a TCS, from an Infosys, HCL Technologies, LTIM, TechM for that matter. All of these stocks continue to weigh heavy on the indexes as we speak. Sudeep, do you see any signs of a recovery for Nifty IT, a meaningful one?
Aisha, if we see the Nifty IT chart, Nifty IT has already, in the last many weeks, we have seen a good recovery in this, and the index has recovered more than 50% of the entire fall that we had seen in from January 2022 till March or April 2023. So almost this 50% recovery has been done, and now I feel that it could consolidate around these levels. And all the names that you have mentioned, whether it is LTIM or whether it is TCS, now after a bigger move, they're all trading on the sidelines. But still that consolidation is fairly okay. I feel that within all these IT names, there is one stock which is now trying to break out, which is a mid-cap name, that's a Persistent Systems. Now that stock during the entire fall of the IT sector had not fallen, it outperformed. And now, despite the rest of the IT pack going on the sideways, they are consolidating. This stock is once again showing signs of a breakout on the upside. The stock is trading above its 20-day exponential moving average. It's looking strong on the daily and the weekly chart. So I feel this can be bought with a stop loss of 5,800 on the downside. And immediate short-term targets would be 6,100, 6,150 on Persistent Systems.
Okay, point Taken. That was about persistent systems. Let's take the CT picks as well from our chartist, the closing trades that they're punching in. Nuresh?
So would continue to stick with GAIL India. The stock looks promising. Retest of the recent breakout and reversal seen today. Expecting it to slowly make a new 52-week high and an all-time high from here.
Coming in on GAIL from Nuresh. What about you, Sudeep?
I'd like to add escorts at current levels. Stock after consolidating at higher levels between 3050 and 3190 since last 12 to 15 sessions has given a breakout above the swing highs, the recent swing highs. And it's showing good on the daily as well as weekly charts. The stock is holding its 20-day exponential moving average. It may, which it around 3065 on Friday. It retested that zone, and once again we are seeing a pullback from that zone today. So I feel from the current levels, this stock can be bought with 3190 as a stop loss and 3320 as a target on the upside.
Great to have you on the show today. Thanks for taking the time out. We're going to take a very quick break. When we come back, we'll continue our discussion with Sudeep as well as Nuresh.
As such, if you look at the index, because yes, there are very wild moves, but at the index level, it's pretty much flat for the trading session. But it is raining medals for the Indian team at the Asian Games. So at least that's some positive news. The Indian women's cricket team has defeated Sri Lanka by 19 runs to bag a historic gold medal. India also clinched the top medal in the men's 10 air rifle team event. The Indian shooting contingent, consisting of Divyansh Singh Panwar, Rudrakansh Balasaheb Patil and Aishwarya Pratap Singh Tomar, hit the bullseye in the men's 10-meter air rifle event. Aishwarya Pratap Singh Tomar also won a bronze medal individually. The Indian team in the men's 4 rowing also grabbed the bronze medal. Meanwhile, Indian shooters got off to an impressive start in the Asian Games campaign as the experienced trio of Mehuli Ghosh, Ramita Jindal and Ashi Choksi secured the women's team's silver medal in the 10-meter air rifle event. Additionally, Ramita Jindal also claimed the individual bronze medal in the same event. So it's been raining medals for us at the Asia Games, and of course the latest coming in that the women's team has bagged the gold medal when it comes to the cricket part of it. So definitely 3 cheers to that as well. But welcoming us, or rather we are welcoming on board Kunj Bansal as well. He's joining us to talk to us about the fundamentals of the market. Kunj, hi, what do you make of the wobbly moves that we have seen on the markets of late? Do you think it's a bit of a shakeout which was necessary, or it is a bit of reversal of sorts?
Yeah, one can never take a call on the short-term movement of the market. But yes, after the sharp rally that we saw in the first fortnight of September, and almost I think 10-12 trading sessions, market was moving one way up. There had to be some correction if we talk whether in terms of technical terms, whether in terms of short-term correction or whichever way. So that's what we have seen. If we look at the numbers on the peak in Nifty, we reached 20,200 almost, and right now we are at 19,700. So that's a 500 points correction. In percentage term, it's hardly 2.5% correction. And in terms of number of days, I think 4 or 5 trading days, the correction has come. Today, market is already showing that like it's trending, trying to move in a trend or in a zone. So that's where we are. I think more importantly, the triggers going forward of the result season is something that will be worth watching.
That's a view as far as market is concerned, but as far as the index is concerned, 19,700 thereabouts is where we are at. Bajaj Finance is your top gainer with an uptick of 5%. Bajaj Finserv, followed by Apollo Hospitals, Tata Consumers, Coal India. In fact, Apollo Hospitals has been sideways for the longest time. I think today it's seeing a bit of a perk up. Nuresh, your view as far as some of these hospital names are concerned, and even pharma generally, what is that standout name that would be a consensus buy for you?
So out here in the hospital space, we've seen very strong trends across the board in a lot of names, whether it is Narayan, Rudale or other names. Out here, Apollo Hospital looks interesting for the fact that the stock has been at the same price where it was almost 1.5 years back. It was at 5,000. Today also it's at 5,000. 5,300 is a resistance where it topped out a couple of months back. It's making a nice consolidation at 4,800 to 5,300. So at current levels, Apollo Hospital seems to be the best bet in the hospital pack. The rest of the names have done really well. In terms of pharma, we are seeing some signs of topping out in the names like Lupin, Aurobindo Pharma, Glenmark, which could see some bit of a correction. Sun Pharma remains a place to watch out for. That's a stock which is coming back to the prices where it was in 2015. So on dips, Sun Pharma could be interesting.
Pharma on dips is something that you're looking at. But what about IT, Kunj? Of course, the stocks were sideways for the longest time. Then we saw a bit of a sudden spike in those names. Today, again, they're consolidating a bit ahead of the earnings season, which will start in 10 days from here on. How should one position themselves in IT names?
So yes, you are right. After these, specifically more after the June quarter numbers that came in, which was a continuation of earlier 2 quarters also, wherein the growth was being seen to be slowing down for the IT industry in general. We had seen markets disinterest in the IT stocks, and the stocks had corrected. After that, with the recent rise in the market that was there till about few days ago, on a rotational basis, when all other sectors buying got exhausted, we probably saw some money going into the IT stocks as well, and we saw IT stocks doing reasonably well. In fact, some of them hitting 52-week high. Obviously, now from there we have seen very marginal correction in line with the market. The result season is expected to be in line with the market expectation. I don't think for IT sector as a whole there is going to be any surprise, neither on the positive side nor on the negative side. So with this recent participation having come in and with market having moved up sharply and now trying to move in a consolidation kind of movement, we should see the same happening to the IT sector as well.
A bit of a sideways move. Don't expect surprises or shocks coming in for the IT sector. But it was a bit of a shock as to what happened to Delta Corp when they got that order from the tax authorities worth a whopping 11,000 odd crores. Do remember that the company's market capitalization was almost 5,000 crores last week. So after that 20% dip, that too might have gotten eroded by almost 1,000 crores. So it should be around 4,500 crores thereabout right now. So quite a big, notice coming in. However, the company maintains that they would, legally take whatever course is necessary. Let's go across to Avan to get more details on this one.
Delta Corp under pressure as it's languishing at its lower circuit, and that's on the back of the fact that the company has received an intimation from the Directorate General of the GST Intelligence. This is for a shortfall of tax under GST along with interest and penalty from the period of July 2017 to March 2022, which comes up to about 16,800 odd crore rupees. Now, the first notice is for about 11,400 odd 140 crore rupees, and that has been raised directly against Delta Corp. The other notice of about 5,600 odd crores has been against 3 of the subsidiaries of the company. That is Casino Delta Denzong, High Street Cruises, as well as Delta Pleasure Cruises. Now, the company has said that the amount that has been claimed in the DG notice is based on the gross bet value of all the games played in the casinos between 2017 to 2022. The demand for the GST on gross bet value rather than gross gaming revenue, they say, has been an industry issue, and various representations have already been made to the government and at an industry level on this issue, and therefore they said that the company has been legally advised that the tax demand is arbitrary and contrary to law, and the company is going to pursue all legal remedies to challenge this tax demand and the legal proceedings. Remember, this is following the news of the recent resignation of the CFO of the company. We also had the negative news of the 28% GST being levied. So on the back of these two news pieces plus the latest news, it has certainly been pretty negative for Delta Corp.
Well, this particular tax notice surely has been negative on Delta Corp. What's holding out is the entire real estate pack and HFCs as well, as the government is now mulling a $7.25 billion housing loan interest subsidy scheme. In fact, let me take it across to Prakash Priyadarshi, my colleague as well, and get in more details on what exactly, Prakash, is the plan here.
Yes, we are learning from our sources that the Ministry of Housing and Urban Affairs is ready with the proposal for a housing loan scheme which is around rupees 7,000 crore. As you are aware that this scheme has already been announced by the Prime Minister from Red Fort on 15th of August. And it is largely meant for urban poor. So it's a big development coming in, and sources are informing that as per the proposal of the scheme, interest subsidy would be given to the urban poor and middle class for housing loan up to rupees 50 lakh, and there'll be interest subsidy, and that will be around that will be in a range of 3 to 6% for a period of 20 years. So it's a big development coming in, and the urban who is planning to get loan at subsidized rates, they are going to get benefit. Sources are also saying that the proposal has been ready, and the modalities has also been prepared by the Ministry of Housing Affairs, and it is being discussed at this point of time with the Ministry of Finance, and the government is expected to announce it formally very soon. Back to you.
For that formal announcement, because of course the Prime Minister in his Independence Day speech did allude to the fact that this is in the works, but of course the proof of the pudding will be in the details. So we'll watch out for which exact segment of housing loan would it cater to, what could be the actual benefit coming in to the companies, because for now the likes of DLF, Godrej Properties, etc., all of them are running away, and not necessarily do they cater to the lower end of the affordable segment of the houses. So of course we'll have to wait by and see how this really tracks. For now it's Berger Paints which is down about 8-9%. Religare is also seeing a bit of sell-on news on that open offer expectation. Kalyan Jewellers is down about 5%. PNB Housing is down almost 3 to 4%. And then of course on the gaining side you have Gujarat Ambuja Exports, MCX, Sundaram Finance and Himadri Speciality as some of the names which are doing okay. Kunj, what's your view on the auto stocks? Because of late there has been a bit of a pick-up. The festive sales, at least the first look of it, is very, very positive. In fact, if we can, let's play up what Maruti's Shashank Srivastav had to tell us on the festive season, because the overall expectation is from July, August, there has been a perk-up, discounts have come down, and going forward as well, they're expecting good momentum to continue. Listen in and then we'll discuss this further with Kunj.
So really the current level of discounts are more in the cars like the Alto, the Celerio, the Ignis and the Espresso. Those were also the cars where our supply has been much higher than what the demand was, and that was actually necessitated because we did not have the semiconductor related components to make the other models, where we have a long waiting list and many pending bookings as well. So there was this contradiction in some models which had no waiting, therefore no very low inventory and absolutely low discounts. Whereas on the other hand, we have discounts in some of the others. But I don't expect them to be increasing in this festive season, and the reason is clear, which is that we have modulated production of these cars, the smaller cars now, and what has enabled is that we are now able to produce those other vehicles which have got a long waiting period, like the Ertiga or the XL6, the Brezza, the Fronx, the Baleno, the Swift, and so on and so forth. And the reason why we are able to do that is because we do not have that semiconductor component supply since July. And as you would have observed, in July as well as in August, we have seen some very good production of those models where we had waiting. So overall, I don't expect discount levels to increase from the current levels, even for the smaller cars.
Okay, Kunj, so between M&M, Maruti and Tata Motors, which would be your favorite?
Yeah, I wish it were that easy to answer this question. Nonetheless, we have the festival season coming up. And there is always a hope, whether it actually turns out or not. But in India, we are always optimistic, and that's a good thing. So in the festival season, there is always a hope that the demand will pick up. Let's see what happens. The monitorable are, as we all know, that till about a week ago, monsoon was almost 9% deficient. There have been some rains in some parts of the country in last 1 week or so, but whether the deficiency has been fully covered, not till now. Now that will lead to the already slowdown or the pressure that has been there in the rural consumption. We know that rural consumption hasn't been having a very good support, or the demand hasn't been there. If the monsoon doesn't pan out, if the crop doesn't come as expected, then that pressure will continue. So that in turn will in fact have an impact on inflation as well. Interest rates might not come down and so many things. Now that will ultimately result into automobile demand not picking up as expected. On the other hand, let's hope that the monsoon becomes normal. We have good crop. Then we will have the festival season demand coming up, and that's where the interest in the automobile stocks probably has come in partly as of now.
Kunj, the other sector I want to flag off is what's happening with real estate as well as HFCs. You know, my colleague just flagged off that the government is mulling that $7.2 billion housing loan interest subsidy scheme. But the fact that it's targeting only low-income loan applicants, while some of the realty names may be running up higher, but I don't think really it impacts them. Not a Macrotech, not a DLF, and surely not an Oberoi Realty. You think it's more the HFCs would stand to gain out of this, if at all?
Yes. One, yes, because of that, and two, hopefully we are going through a peak of the interest rate cycle. So while the correction in the interest rates is nowhere there in the offing in the near future, but hopefully at least 9 to 12 months down the line, subject to inflation coming under control, we should see the interest rate cycle reversing. So that will also help the financials of the housing loan companies, both in terms of margins and more importantly in terms of growth picking up. This new government scheme, I have not seen the details as of now, but it is very clear that whatever government scheme comes will come for the affordable housing or the low income segments. Government is not going to give any benefits to the middle income group or certainly not to the high income group. So it will indeed, you are right that if at all whatever benefits come will be more beneficial for the housing finance companies who cater to the original buyers or the genuine buyers, and within that also the buyers at the lower end.
Taken. There's just some news flashing for you at the bottom of the screen as far as Strides Pharma is concerned. So the scheme of arrangement that my colleague Somit was highlighting seems to have kind of taken place now. This was regarding the transfer of the Stelis Biopharma business as well. But that was much talked about, I think, already. I'll try and get more details on that one. But in the meantime, let's go across to my colleague Sharad to get the understanding as to why people are looking at Godfrey Phillips right now.
Well, yes, in focus we are having Godfrey Phillips, and what we are having a chat with the dealers. They have stated that certain counters in the HNI segment have been acquiring the stock, and this is happening for the last 2 trading sessions. If you look at the volumes also, that's coming at almost 2 times its 20-day average, and overall the stock did actually correct over the last 3 to 4 days, actually 2 days before the trading session, but then now the important 50 DMA levels as stock has actually gone up past that as well and is currently trading above all the key DMA levels as well. Now also there was a channel checks, what we are hearing is that in the Q2 numbers the sales are expected to be as strong as the Q1 numbers, and in the Q1 numbers also the numbers actually went up, especially on the stock price also, and this time also it is expected that the Q2 sales volume that is expected to be on a higher side.
Taken just a few more details that are coming up as far as that Strides Pharma is concerned. What they're looking at doing is the demerger of their soft gelatin business of Strides into Stelis. The CDMO business of Steriscience will also go into Stelis, and there won't be any cash consideration. There would be a share swap that will happen, and as a result of that, ultimately the Stelis or the resulting company, whatever it will be called, will be listed on the BSE and NSE separately against Strides Pharma. So that's the latest that we are picking up, and that's the news coming in on Strides Pharma. And since we are on the subject of pharma, Kunj, which are your favorites in this vertical, whether a healthcare stock or a diagnostic stock or even your manufacturers?
So we have seen some interest coming back in the diagnostic stocks on the talks of finally the price war seemingly coming to an end. In fact, in some cases, there is a talk of even price hikes having been taken. So the significant underperformance that was there is being seen to be catching up. Of course, it could purely be a function of the fact that the market has risen sharply and we reached the life highs in terms of indices few days ago. So when such kind of buying happens in the market in rotation, every sector comes into the buying radar of the investors. But coming back, yes, so that's the reason we saw some interest coming back in diagnostic stocks. I think over the medium term, ultimately taking the combination of financial performance and valuation, it will be back to the pharma companies that will doing well on a sustainable basis. All other sub-segments like diagnostics, like hospitals, will probably more function of other shorter-term movements and the corporate mergers, amalgamations, buyout news, and things like that. We are probably hearing that US market, the pricing is stabilizing, and that's where we will see the pharma companies benefiting back in the long term.
Right. Okay, let's get in some BTST trades as well going. While you're seeing a big spike up on Strides Pharma, holding up 6.5% as we speak and spiking up even further, we should just quickly bring up the intraday graph of that stock. It's sitting pretty much around the highs of the day. But Sudeep, any BTST trades that you would recommend?
Yeah. So if we speak about BTST trades, then there are a couple of stocks that are coming up on the radar. The first one is Coal India. So from the PSC space, the public sector space, this stock has, after a bigger move, it has consolidated on the upside, and once again we are seeing a fresh breakout on Coal India. So from here on, I feel that with a 284 stop loss, the stock can be bought for 296 target on the upside. And one more stock which comes on radar is Bajaj Finance. So Bajaj Finance, we've seen the stock doing well today, and I feel the momentum can continue there also tomorrow. So here I feel that the stop loss could be 77.30 on the downside, and the probable targets on the upside could be around 78.80, 79.30 for tomorrow.
Okay, point taken. So those are the BTSC trades coming in from Sudeep. Naresh, what are your trades?
So first would be a buy on GAIL India. The stock is showing a reversal signal from the recent support. Stop loss at 121, target price of 126. Second is a buy on Bandhan Bank, making new weekly highs. Stop loss at 247, target price of 256.
Some BTST trades coming your way over there. Let's just check in on what PSBs are up to. Remember, as of Friday, some of them were some stupendous gainers. Not as much SBI, but Can Bank, BOB. They were the ones which, moved up quite significantly. Today, you're not really seeing a follow-through come in here. BOB, while it is holding out well, PNB is, but not so much. Canara Bank, which saw one of the biggest moves in Friday's session. Sudeep, how are you reading into the charts of some of these PSBs, Canara Bank, BOB, PNB?
See, if we see Canara Bank, BOB, and PNB, the best out of the lot is PNB, because the kind of moves that the stock had shown, like in between, we had seen a small correction in PSU Bank before the last move that we have seen in the last 4 or 5 days. In that intermediate correction, PNB was the only stock that was taking support at 64, 66 kind of levels, and it breakout on the
on a bit of a sketchy line, but nonetheless, that was his view as far as PNB is concerned. Well, just 3 minutes left for the trading session to end. So, Kunj, on that note, we'll let you go. Thank you so much for joining us. Quickly, let's take stock of some of the other big buzzes as well. IRB Infrastructure was a big mover today with that 9% spike. MCX India was high by around 6-7%. Remember earlier last week we brought you the khabar that it is possible that the new software might come on board in October itself. There's also the sugar names, the likes of Balrampur Chini as well, which are doing quite okay. Sundaram Finance, Ramco Cement, Sobha, and the entire real estate pack, to be honest, is doing quite well. Can't take your eyes away from Bajaj Finance, which is high by 5% on account of that fundraising. And Karnataka Bank too is gaining ground on account of that fundraising that they have done. Total of 1500 odd crores, but 800 crores is what is going to come. The equity investment. Strides Pharma, that continues to gain. Remember, we have been getting you details of the restructuring that has taken place there. They are going to demerge their CDMO business. They had given the guidance that the debt to EBITDA will come under 3 for FY24. They are maintaining that guidance as well. And in fact, they are likely to hit the mark of 2.5 times as far as debt EBITDA is concerned in FY25. So they are looking at streamlining their own portfolio as well as the structure as well. so that they are able to kind of manage their business better. They're not changing the FY24 outlook. They are talking about 700 to 750 crore worth of EBITDA. The scheme is expected to be effective in FY25, and despite the demerged Stride softgel business, Stride is confident of achieving their EBITDA despite the demerger. So whatever growth was coming from that business is going to come organically itself, and that would be the good news coming in. Separately, it's a strong pipeline of products that they're talking about, global market expansion. The listing is likely over the next 12 to 18 months or thereabouts. So overall, that's the news coming in on Strides Pharma, holding on with a gain of around 8%.
Given the global context, one would say that this flat close for us as well is really not bad. By the way, we've closed in as flat as it can get for the index. While of course there have been a fair amount of losers and winners out there, let me just quickly bring up that list for you. Cement surely has been one pack which has held out very smartly, led by ACC, Ramco Cement, Grasim to some degree, and Dalmia Bharat as well. These have been big winners today. But for the index, while IT has lost, it's some of the financials which have actually done well. And top, of course, of that is Bajaj Finance. What a stupendous gain on this one. It's finally closing in almost a gain of about 5%, 4.5% on in the cash markets. Bajaj Finserv as well, following in tow, almost a 3% move coming in there. And then, of course, there's been Apollo Hospitals, Tata Consumer, Asian Paints, Kotak Bank, Titan. They've all held out very, very smartly in trade. Within the liquid universe, where the breadth actually managed to close in favor of the advances, it was a 122 to 66 kind of ratio. But Rampur Chini has been right on top there with a 7.5% gain. There's been M6 as well, which has been a big winner. But that's not the case with Delta Corp, which closes in with a 19% move down. But that's pretty much it on this edition of Closing Trades. Thanks very much for watching. We'll see you again with the market action tomorrow morning at 8 a.m.